Good morning, guys. Welcome to today's session, market snapshot session. It's a very important Friday. Look at Chege. Hi. If you can hear me, just say hi in the chat section. Again, it's a very important Friday because you're having NFP and you're also trying to make sense of what is happening to these assets. So if you can hear me again, say hi in the chat section while we start. Yeah, so euro dollar, euro USD, and we have highlighted was last Friday, with the session we had last Friday. Christopher, hello. Korea, hello. I'm seeing familiar guys for the snapshot series. Yeah, so today is a very critical day. It's going to determine how we go from here, at least for the better part of next week. Just squad, hello. The general, hello. Yeah, so as we discussed this, I also hope you've been following the other snapshot series, and it's helping you with your analysis. So I'm just marking where we were last week in terms of what we had discussed. I remember last week we had said we still expect the dollar to be strong. That was on Friday, and that was creating shorting opportunities for us. And indeed, we had this sell-off from when we had discussed that. Remember, Euro USD is still in a downtrend, and the purpose of doing fundamental analysis is to know whether this downtrend is going to continue or not. And last week we were able to ascertain that indeed we're still going lower, and that's what happened last week. Right now we have a back on Euro USD. Seems as though we're on a critical level. Hello guys, Moses, Masharia, Irene, Edwin, Basto. It's like live, yeah. Is it tapped up? Okay, so it seems as though on Euro USD we're on a critical level. However, what's going to determine this is the news that we have today, and we'll talk about that. So we're just recapping what we did last week and how that's going to take us this week. Same thing with GU. Last week it was what? Last week it was 29th. Yeah, 29th of September. So this was the week, this was the day here. So I'm using the hourly chart. So the dotted lines represent midnight, and this was Friday. So from Friday again, for GU also, we had the market going lower after this pullback that was here. So after we had the pullback, the market melted away down smoothly. I know it looks like we're having another pullback. Again, I remember the last time there was a question asking what's the difference between a reversal in the trend and a pullback or a retracement. And indeed, we saw that we had our retracement or a pullback, which is a slight move. Let me just zoom this out, which is a slight move against the trend and then a continuation of the trend. And that's what we had last on Friday. We're experiencing the pullback and then the continuation. So this week, we are trying to determine, is this a reversal or is the trend still pulling back and we continue going lower? So we are trying to explain, okay, so yes, we are in a downtrend like that, but what is causing this? What is causing this? Is this a temporary move upwards so that we'll see a resumption downwards, or is this a completely new trend that is forming? And the best chart to explain that will be gold. Yeah, so for gold, it's been very hectic. We've had this downtrend towards the end of September. I think this was until Friday. So this is where we were on Friday with this point over here. Yeah. So this was on Friday. And then we just melted away. On Monday, it was just a downtrend. And now we're moving sideways. So you can see, instead of us having a retracement back up, we're moving sideways with gold. And that can tell you something about the market today. What is this telling you about the market? If I think you can start thinking about it. How comes we've suddenly paused right here? So if you look carefully, we are on a very critical level for gold. So this is this low. So this is on the daily chart. We're on this low here. Initially, if you look at the previous snapshots, this was our target. I had highlighted this gap over here as the target going forward, but it seemed like it just broke through that target. And we are at the moment here. We've not yet quite touched the low, but it's looking highly likely. There are chances that we may touch this low. So now the question is, what is causing this sideways movement and why haven't we gone lower as of yet? So that's what we need to look at today. So if I go to like charts, now let's have a look at the fundamentals and what they're saying. So of course today, the most important release is non-farm and wages. Non-farm and what is wages? Average hourly earnings, which is wages. So these will be the two most important releases for the day, and they will guide us on what to do going forward. They will guide us on what to do going forward. So let's just have a read on the two here. So waiting for payrolls. So this is the headlines for today. Waiting for payrolls to jump back into the dollar. So it seems as though the buying in gold has paused this week because the market is waiting to know what the payrolls data is going to come in as. So that explains, for example, why in gold. That's why in gold last week it was a very clear downtrend. So you can see last week it was a very, actually more than the past 2 weeks, it was a very clear downtrend. But now traders are uncertain whether the reading is going to come in favor of the dollar, and that's why you have this sideways trend. And if you look at the reading from the charts, from the news sources, you can see that number one, we're expecting a slightly lower reading. And that is what is influencing a bit of the weakness we are seeing in the dollar. Because remember, a higher reading is when is what creates a strong dollar. So at the moment, the previous reading was 187,000, and today we're expecting 171,000, which is lower than the previous. So because you're expecting a lower reading, based off that expectation only, the dollar has softened a bit. We've not seen strong buying on the dollar, or rather, currencies that are paired against the dollar, for example, gold, euro, pound. That explains why we are seeing weakness across the board with the dollar, because guys are waiting before getting back into this. So if you see Euro USD, we've had that pullback here. Actually, this one has just been resting down here. We've not really had a continuation of the downtrend. If you look at GU, same story. This past 2-3 days, we've had a recovery in GU. If you look at gold, we've had a sideways movement because the dollar is no longer strong at the moment because the traders are waiting. Somebody is making background noise. Okay, just a minute. Yeah. Okay. Actually, that might be Rufus. We should invite Rufus to the session. Okay. So, as I was saying, we've had a clear direction from last Friday. And last Friday, we said we are looking for sales in euro, pound, XAU, based off the market sentiment and based off the news. However, this week, it hasn't been clear because the expectations are not very clear. The overall sentiment is we need a strong dollar, or we're expecting a strong dollar, but the expectations from the news, that is, we are seeing that the market is expecting weaker payrolls, and a weaker payrolls means a weaker dollar. So you can see there is some mismatch between the overall sentiment and the market expectations. And that is why we are having a sideways trend in gold and some sort of relief for both the euro and pound. So you've seen the euro and pound coming up slightly this week. Okay, so back to this. I usually use ING Economics. It's usually very good source, no ads. It's a clean site that I usually use for analysis. Okay, so here it's saying, let's just jump into this article here. saying the pause in is against the dollar. Now, thing is, there's a bond sell-off that has been happening. Now, before we go any further, let's talk about that. Here. So if you look at bonds, so when you're looking at, remember that the markets are interconnected. Bonds are connected to stocks, they're connected 10-year yield. This is how much am I getting if I invest in a US government treasury. It's been on the rise. So this is a daily chart, and you can clearly see that it's been on the rise the past 1 month or so, and it's at the highest it has ever been. If I zoom out this chart, probably I'm not able to zoom, but it's been the highest it has ever been in years. Yeah, this means that the US is offering the highest yields if you invest in bonds in a very long time. And that means it's making the dollar very attractive. So I've just compared this orange line here, which is the dollar index, against the yields. So you can see when the yields go up, the DXY also tends to go up. It's not very clear because the scales are different, but that's generally what happens. If the yields are going up, especially the 10-year, then the dollar is strengthening. Yeah. So that's one thing to keep in mind. And why are the yields going up? Yields are a way of, is it really showing on my end? Yeah, it is. I'm saying it's loading on the charts. Oh yeah, yeah. It's okay. Yeah. So again, so if I was to remove this, okay, this orange line again is the dollar index, but I can just remove it for now. So we have the yields first. So if you do an analysis on the yields, it's all the way up. It peaked at 4.8%. That means if I invested in a 10-year US Treasury bond, I'm getting 4.8% return on that. And that is very important because that means it makes the US dollar very attractive because foreign investors want to invest in US Treasuries for them to benefit. And this is what is guiding a lot of investors because usually the bond market is considered to be the smart market in quotes because it's mainly institutional investors that participate in the bond market. So if yields are going up, then it's giving you a good trajectory of where to expect the dollar. Now, let's go back to our article. So usually for yields to go up, the current bonds need to sell. So it's usually just basic maths. So the bond sell-off is granting some room for recovery for most currencies against the dollar. Yeah. So that means at the moment, yields have sort of paused. People have stopped selling bonds. And it's sort of giving some relief to the dollar. Today's payrolls are, however, the big event of the week. And a strong read will easily put the market back on a bearish track and reignite the aggressive dollar buying. Yeah. So you're currently looking at what is the market expecting? Because remember, this is going to guide us. So there's some construction in the background. I hope you'll be able to hear me clearly. But this is going to guide us on where we think interest rates are going next. Yeah. So remember, the main thing that's guiding the dollar strength is interest rates. If we see that there is higher data today, or if the reading, for example, here, if the reading comes in significantly higher than 171, it has to be significantly higher. So you're talking about the Forex Factory calendar. Now, one thing, the reason I'm saying significantly higher is because different calendars have different numbers here. This one is saying 171K. If you go to my FX book, here it's saying 170K as the number expected. Yeah, so at my FX book, you're saying 170K. And on this article itself, the estimate is 175K. Yeah, so you can see there are different estimates from different sites. You need to know if this reading comes out, it has to be significantly higher. That means there has to be no doubt that it's a higher reading. That means even if there's some article that was quoting 169, other guys were quoting 175, 173, it has to be significantly higher than that, so maybe 180 or something like that, that's when it's going to ring bells. Yeah. Okay. So going forward with this, unemployment rate is expected to edge lower at 3.8%, and average hourly earnings are expected to stabilize at 4.3. Okay. Everything else is all good with this. So let's look at what the market, or where the market is expecting interest rates to go. So remember, it's interest rates that guide the strength of the dollar. Now, if there is data that suggests interest rates are going to rise, that's when the dollar is going to strengthen. So that's how you usually interpret it. And at the moment, the market is expecting, so this is the CMA Group Fed Watch tool. Yeah. CMA Fed Watch. So it's just showing us what the market is expecting the next interest rate meeting. So at the moment, there is a 18.5% chance that we will see a hike in the next meeting. Yesterday and the whole of last week, it was around 20%. So the higher this figure goes, the stronger the dollar. The higher this figure goes, the stronger the dollar. At the moment, it's at the lowest I've seen it this week at 18.5. So there's an 18.5% chance that we might hike. And there's an 81% chance that there will be no hike in the next meeting. Yeah. If this figure edges higher, then it will be probably because of that higher employment reading that we have later today at 3. That's one thing to take note of. Now let's look at the targets if that is to occur. So let's go back to the charts. So if I'm seeing a higher reading on employment, then I know that this downtrend is not yet over, and traders will be looking, will be suggesting to take this lower. Now, what could be the potential targets for this? First thing is, if you're heading into new territory or new prices, usually it's very okay to look for round numbers. So in this case, if I go to here, first level that should be keen about, this is just a minute. It should be just a minute. Yeah, that. So anytime you're heading into new levels, usually the best thing to do is to look for round numbers that end with a 0. And in this case, we have 1.046000. Yeah, that would probably be an area that the market, which has previously touched. If you go back to the daily, you can see clearly, I don't know if I can say this, you can see clearly that this was part of the lows we had for this week. So these lows over here, it's very possible that if the market has higher readings, then you could see the euro falling back down. So of course you have to use your technical analysis to know how possible this is, but that could justify a continuation in this trend going lower if at all the reading comes in lower. So at the moment, we have very interesting zones to look for, that traders will be looking for. For example, this area here where we started selling off on Euro USD. Yeah, so these will be the lows. This is probably a correction of this small uptrend here will be in order. However, of course, you need to use your technical analysis, and you need to know, you need to have a strategy. You can't just be entering this market without a strategy. The fundamentals are for there. What is the general direction? What if those two news each other? Just a minute before we talk about the other outcomes. Same thing about with the GU, GBP USD. We will be looking for corrections if at all payrolls come in higher, because traders will be expecting higher interest rates. That means the dollar should resume being stronger. That means this will probably resume going lower. Again, you need to use technical analysis to see if indeed the trend is continuing lower before you start determining trades personally. So that's the scenario for GU. We have those levels over there. I hope you will rewind and mark. This is on the daily chart. I'm just marking the key levels that I'm seeing and the likely direction. Okay. Euro USD, sorry, gold. I will talk about the yield again. So for gold, just make sure you're marking out your charts so that you know what you're doing. For me, I'll be looking at this level here. It's not yet touched it, but this on the daily chart, it's not yet touched these lows over here, but it's possible that we will indeed go through these lows if at all payrolls come in higher. It'll be a very good reason. And of course, you'll be monitoring how the interest rate expectation is with the website I've just shown you. But these laws being breached is probably a very likely possibility. In the event we have anything different, then I think this gap over here, in the event we have payrolls coming in lower, then this gap over here, the market should be retracing. And this gap over here is a good target for traders. If at all you have really bad numbers today, if at all the numbers come in way lower than 171,000. Yeah. Okay. So let's just have a recap of what you've done before we continue to stocks and oil. Let's go back to this over here. We've said there are two ways you can look at your analysis. Number one is the actual news itself. And number two is what are other correlated markets showing you. The first one we've looked at is yields. Yeah, we've said when yields increase, the dollar strengthens. The past few, these are daily chart. You can even use the 4-hour chart. The past few days, 10-year government yields have just been on an uptrend. We've had this slight pullback this week, and now we are resting a bit. But the past from the start of September, we've just been on an uptrend. Yeah. If the US is offering higher yields for its bonds, the moment it's 4.74%, then that means investors or foreign investors would want to invest in US bonds. And for you to invest in US bonds, you need to buy US dollars. And that's where the demand for dollars is coming in. That's one way to look at it. The other way to look at it is directly through what are the interest rate expectations for the market. So come here to CMA Fed Watch tool. You can see that for the next meeting, this is for November, yeah, there's an 18% chance. At the moment, it's dropped. It was at around 30, I think early in the week. There's an 18% chance now that the Fed might raise interest rates in the next meeting, which is in November. However, if the numbers come in to suggest strong employment, then this is going to spike. This is going to go higher. And if this goes higher, then it implies a strong dollar. So this is what we'll be watching for. In December, is the market expecting anything? Yeah. So in December, there is I think it's at 31% that will have around 5%, 0.5% hike. Sorry, 0.25. And then there's a 3.9% that will have an entire basis point hike. Yeah. But at the moment, all eyes are on November 1st. And if there's a higher chance that the Fed might raise, which is represented by this graph, then chances are the dollar is going to be strong. So you're going to be watching this also in terms of the reaction to the data, because sometimes the data can just mix everything up. Okay. So we've talked about that. Another interesting thing that has happened last month is if you monitor, you can actually go to the CME tool and check from there immediately to see the reaction in the market. Okay, so I was going to check out futures positioning, but let's just jump into oil first. Am I able to see this today? Okay, let me see if I can sign in. It's going to be a long process. But for gold, you can check out how how many longs, how many shorts, the positioning of traders in the market. But obviously that is based on what's going to happen today. So we won't really dive too much into that today. Okay. Now, having said that, let's jump quickly into oil and then stocks. So for oil, they're saying oil prices remain well supported. So the analysts think probably still, in as much as we had that pullback in oil, there's probably still a good chance to believe that oil prices will remain elevated. And why so? Following Saudi Arabia and Russia extending their voluntary supply cuts through the year, our balance shows that the oil market will see a deficit of 2 million barrels a day in the final quarter of 2023. So when there's a cut in the supply of oil, then the prices are expected to go up. So that means the trend is supposed to remain elevated. A tight market, that means a market where the supply is very little. A tight market for the rest of the year suggests that prices should remain well supported for the remainder of 2023. Our forecast for Brent remains unchanged. We expect it to average $92 per barrel over the fourth quarter of the year. Now let's look at, this is Brent. That market, Brent. So now let's look at Brent, the oil market, and what we have. Okay, just a minute. Okay, so UK oil, here's UK oil. Yeah. So remember, for oil, we've had it going up and down between $87 per barrel and $71 per barrel, which is basically these points over here. For the better part of the year, we've just been hovering between that point and this point over here. And I remember saying it's very hard for these guys to push prices upwards because demand seemed to be affected, but they did. So using the supply cuts, they've managed to create that sort of uptrend upwards. So from the research, analysts are expecting oil prices to average, there the statement is $92 per barrel. Now, what I'm seeing from that, or what I'm interpreting from that is we could see a new range being formed for oil around $92 per barrel. That means around these levels over here for the remainder of the year. Because you remember oil likes to range. You will get to a point and then starts ranging. And $92 per barrel. So I can delete this other, I can delete this now. This one and this one. Yeah, so $92. Today is Friday. $92 per barrel should be around this point. Yeah, just a minute. Properties. Okay, so the line I've marked, that's $92 per barrel. Is it going to be precisely there? Obviously not, but we might see this range widen or decrease, but we do expect oil to range within the given parameters. At the moment, what are we looking at? It seems as though we have had some sort of pushback based off of the strong dollar. So if you look from around 28 September, we've just been going down, and this looks like a very similar chart to gold. If I was to look at gold, for example, you have the same downwards trend. So that means for today, where is oil? For today, it looks like oil prices will also be affected by the NFP reading that is coming out, because this is very correlated to what has been happening in gold. And if we see it going lower, then chances are we will trend all the way back down here to $81 per barrel. And that's a very huge possibility if the dollar is strong today. Yeah. However, again, still use your technical analysis to verify and to pick out entries on your own. But it's looking like a very huge possibility that if the dollar strengthens, then the price of oil is going to go lower. Yeah, there. So that's oil. Now, there's a very interesting thing that we've noticed with indices. Before I start answering the question, if you look at UT 100, which is Nasdaq, and S&P 500, which is US 500. So let me add period separators here. Just a minute. Okay, so this is US 500. This is US 30, and it's supposed to be daily, and Nasdaq. Now, ideally, because these are all indices representing the US economy, they should be somewhat correlated. That means they should show some similarity in the movement. But if you notice, if I was to mark January, this is January. I think January over here. For Nasdaq, this is where January is at. We have marked this point down here. Yeah, this was January. If you go to US 500, then January is slightly higher, and that should be here. Yeah, this should be. Yeah, over here. Where is it? Here. Yeah, should be around here. Now, if you look at the three charts, you can see that US 30 is down for the year. That means the price it opened. I think it's my internet. Hope everyone is back. Yeah, I think we had a disconnection and then it's reconnected again. Is it the network that has changed? Yeah, okay. Okay, so as I was saying, if you can hear me again, just say hi, just to confirm the audio is okay. But yeah, so I was saying there's a difference between UT 100, US 500, and US 30. UT 100 represents a lot of tech companies, a lot of companies in the tech sector. And these are the Apples, the Intels, the Nvidias, and they have really pushed up this index. There's a lot of demand for those stocks, and it's showing it in the markets. It's showing that this is very resilient. We have had an uptrend for the longest. However, things like US 30 or the Dow usually represents much of the traditional industries in the US. Yeah. And because of high interest rates, these industries have not been doing so well, or they've not been favorable with investors. Not receiving enough to maintain smooth. I think my internet is very low. Okay. I think we're back. Okay. So now what am I leading to with these three? Clearly, UT 100 reacts more positively to good news, and US 30 is showing signs of reacting more vigorously to bad news. Yeah. UT 100, in the event, for example, you have a lower NFP reading today, UT 100 could easily resume this trend. If at all we have a higher NFP reading today, that will suggest higher interest rates, which is bad for stocks. Then this is more likely to have a vigorous downtrend than UT 100 going down. That's what I'm leading to. So when you're doing trading these indices, it's good to pick which one is right to trade when. Yeah. This one has been more resilient to negative news. This one has been more resilient to positive news. So this one is likely going to react more to negative news than if that negative news was to be on this chart. That's all you're saying. So for those who are trading indices, it's good to know which one to pick. US 500 is usually more balanced. It's like a balance of the two. So I believe that's okay with the indices. Okay. Again, you know what positive news is for indices. Positive news for indices is a weaker reading for non-farm. And negative news is a stronger reading non-farm. That means if employment is high, that means you are likely going to see high interest rates, and high interest rates are bad for stocks. Okay, now let's go back to, I think that's what we have for today. We can just go back to, I'm seeing guys asking about the sites I'm using. Okay. So first off, with a lot of just reading every morning, I think this is a good place to start. They update articles every morning. So you can choose between FX and commodities. Commodities, I was reading the oil and gold news from. Yeah, and you'll get a lot of detailed. There's an entire, if I go to commodities, there's an entire PDF document summarizing commodities this month, this one. So you can even download the PDF and print it and just read it. The article I was reading was this one. Oil prices are likely to remain supported. Okay, when it comes to the calendars, Forex Factory is the best because you have related stories that you can read from under each item. However, it's always good to confirm these expectations with other websites. So sometimes you might have news. For example, today, you might have news that is on is being expected, but is not on Forex Factory. So it's always good to cross-check what else is being announced. You can see all these items are coming at 3:30. Way up from here. These are about 10 items coming up at 3:30. But Forex Factory is only they're only very few. Only looking at a couple of them, probably just 6. So you can see the need to cross-check your news sources and never just rely on one website. And then for interest rate expectations, I'm using CME, not CME, CME Fed Watch tool. It gives you good projections. There's even a dot is how many members are inclined to hike, how many members are inclined to stay the same, how many are inclined to pause. So remember, it's a voting type of thing. Yeah. And then basically that's it. And then you can, if you things like yields, of course, you can get them from trading because not everyone trades yields. So this data on yields, it's always good to look at the yields where they're going because it's also going to direct you. So having said that, that's the game. I don't know what's happening to my connection, but I hope we are back. Yeah, I don't know what's happening to my connection, but I hope you're back. Okay, so for next week, CPI, yeah, CPI is next week. And yeah, so if we are expecting, okay, this is how I'd probably look at it. If we are expecting, or if we have a mixed or slightly more mixed, where you get hourly earnings have increased, non-farm maybe is higher or lower. If they are mixed, that is, if one is red, one is green, one is red, one is green, then I'll probably want to wait for the expectations for CPI to come out on Monday. So CPI is being announced on Thursday, but I'll wait. So again, I'm saying CPI is coming out on Thursday, but I'll wait for the expectations, because by the beginning of the week, you should have this column filled for expectations. That is going to guide me. If the data this week comes in confusing, if the data today comes in confusing, that's what I'm going to use to determine whether we need to go lower or we need to have a pullback. So we have scenarios for when the data comes in higher, we have scenarios for when the data comes in lower, and we have scenarios for when it comes in mixed. For me, when it comes in mixed, I'll probably stay out of the market and just wait until Monday to know what are the expectations for inflation before proceeding. Remember, on Monday, it's going to be very quiet also. So next week is kind of dull. Okay, for us living in Kenya, because Monday is a bank holiday, Tuesday is a public holiday. So it's going to be kind of quiet. But anyways, Thursday, when you have this inflation report expectations coming out on Monday, then it's going to guide you for that. So no worries if the non-farm doesn't come in as expected this week. Yeah, so what I was saying is, if hourly earnings, for example, come in higher and then employment comes in lower, then that's a mixed reading. Then you need to know, probably you should stay out because it's not very clear, or you go and look at the watch tool to see how the market has interpreted it. Are people thinking we will have a higher interest rate based off the news or not? Which website shows when those Fed meetings will be held? Same here. So you see, you have 1st November, 13th December, then 31st January 2024, going on and going on. And on each month, they are showing the possibilities of either it's a hike or a pause. So if you don't want to read this graph, for example, for November, if you don't want to read this graph, you have this spot over here. It's saying probabilities. What's the probability of an ease? An ease is them reducing. What is the probability of them not changing? And what is the probability of a hike? When this one begins to trend higher, if, for example, it goes from 18.5, 20, 21, like that to 30, the dollar becomes strong because the expectation is the market is now trying to price in higher interest rates. So I hope that explains it. So, all right. Thank you so much for attending today's session. I'm hoping to see you in the next session next week. Hopefully we'll discuss how non-farm went and how CPI went also, or will go. And then from there we chat the way forward. But remember to always leave room for fundamentals to explain your technicals before you start doing your technicals on the charts. All right, having said that, see you in the next session and have a fantastic trading session today.